Good evening, everyone who is attending the QuickBooks seminar online. My name is Noelle Donahoe, and I am a mentor with SCORE. Welcome to the QuickBooks Overview seminar, sponsored by Central Jersey SCORE chapter. SCORE is the nation's largest network of volunteer, and I repeat that, of all volunteer expert business mentors with more than 10,000 volunteers in 300 chapters. Central Jersey SCORE has over 35 mentors prepared to help new and existing businesses develop successful business operations. We welcome you to set up a self-scheduled mentoring session at our website. I'm going to read the name of the website. It is www.centraljersey, all one word, .score.org. There you'll find a calendar with schedules for the 13 Central New Jersey locations where we mentor each month. You can use the self-scheduling feature to schedule your first mentoring session with two of our expert mentors. This evening, our presenter is Josh Klar of Financial Fitness and Management. Josh has been in the business world, starting in his teens as a power seller on eBay. That takes a lot of dedication to reach that level. And over time, Josh has formed multiple companies and managed finances in industries ranging from real estate and textiles to manufacturing, restaurant, and retail businesses. Josh is a QuickBooks Advanced Certified Pro Advisor in both QuickBooks and their retail point-of-sale programs. He also specializes in inventory setup and management. Today, Josh will provide us with a 1-hour QuickBooks overview. Now, please note that SCORE is also providing a free 2-hour QuickBooks Overview seminar with Josh at the Warren Library on July 18th this year, given in October 2018. This is a hands-on session, and there is a nominal fee for this 3-session series to be given on October 13th, 20th, and 27th, and again, they are all led by Josh. During today's presentation, please enter your questions in the GoToMeeting chat box on your screen, and we will respond to these questions at pauses in the presentation. Now let's welcome Josh Klar, who will cover critical accounting functions and how QuickBooks can streamline accounting for your business. Please enjoy his presentation.
Everyone, I'm Josh. Thanks for the intro. So a little bit about myself. I actually, as I was just introduced as, I did not grow up with an accounting background, and I did not have one at all. And I actually was so fearful of QuickBooks specifically that I hired people to teach me QuickBooks and just let them keep the money because I didn't want to follow through. I had the pit into my stomach whenever I thought of QuickBooks. And finally, my dad had a business, and I helped him out, and I became a pro advisor just from needing to get the information, and I just acquired it over years. And since then, I've been working with accounting firms. I've been working with companies that do inventory, and I've gotten really deep in the weeds of QuickBooks. But one thing that I can bring to you is that others may not, is that I come from a background where I was just like a lot of you are, frustrated, not really understanding why QuickBooks is relevant. What do we need it for? Is it just for taxes? What is the idea? Is it for an audit? So I'm going to try to give you a view on what it was like for me to learn how to use QuickBooks, and then basically I'm going to give you from my perspective, where I took a look and said, okay, well, what could I have done to make this easier and more simple to understand? And so what I'm going to present now is my way of showing you really like the point of it. It's not so much about the procedures that we're going to cover tonight. It's going to be, why are we doing this? And so that way you can take this as a core and follow this up with really developing your understanding of okay, so let's get started. Let's turn off that webcam. Okay, so I'm going to launch QuickBooks now. We're going to be using QuickBooks Premier 2018. It's very similar to QuickBooks Enterprise or Pro. It's all really the same. Enterprise has some advanced features of inventory and multiple users, or more users, up to 30. But right here, we're going to open our QuickBooks and we're going to actually start a new company. And we're going to take you right from the beginning. So I'm not going to use a sample or anything. We're just going to start from scratch. So you can follow these steps and do this for yourself. I recommend just doing the basics right now. We're going to do score, webinar, demo. That's what we're calling our company. Under industry, I recommend doing other, none. Otherwise, it's going to give you a whole bunch of suggested accounts, which we can kind of come up with on our own as necessary, as needed. And then just choose corporation as long as you and then we'll create the company. And that's it. In just a few seconds, this will be set up, and then we can get started. Moment. Any questions so far? All right, here we go. Okay, so now this is our QuickBooks platform. The first thing you can see is the home page. If you ever need to go back to the home page, just go to, there's some new feature tour. It shows every time we start a brand new company. We can close that. Let's go to company, homepage. This takes you to where we are now. And this kind of gives you a bit of a map of everything that you might need on a daily basis for QuickBooks. So here's your customers, whether you use sales orders, estimates, or just go straight to invoices, they're over here. You see payments, anything, and these are all clickable. So if you click on here and go to customers, it'll actually open up a customer portal, which right now is empty because we don't have any customers yet. So let's get started. The first thing that you'll probably want to do when you have a new business is you're going to, let's go back to our home page. You're going to open a bank account. So let's go to banking. We're going to click over here to write checks, and it's going to let us know that we need to create a bank account. So we're going to create a bank account. I'm going to use an example of, let's say, Chase. And you like to put the last 4 digits of the account number so that if you have multiple accounts, you can keep track of them. And that's what you have here. It's all you really need. And now we can save and close. If we look here, this is our chart of accounts. So you get there by going to List Chart of Accounts, or on our home page, go up to the right, and you see Chart of Accounts here. Click on it, and this takes us there. Now, right now, I'm going to delete stuff that came with this. We don't need dividends paid or anything. This is just because we said it was a corporation. So ignore all that right now. It's not going to let us get rid of anything else. All we need to know right now is that we have our Chase checking bank account. Okay. The first thing we want to do is, let's say I'm going to give myself a loan from my own personal checking account. I'm going to write a check to my business so that we can start off. So the first thing I want to do is I want to create a loan account, and I'm going to do this by going to the bottom here and going to New. Now, the company is still going to own me for this, so I'm basically going to create, I can create a loan account or other liability, but this basically, this is, so Okay, let's create a loan. I'm going to call it loan Josh because this is my personal loan to the business. And I plan on paying this back at some point. So the first thing I'm going to do is I'm going to go to homepage. I'm going to go and make a deposit. I'm going to deposit a check right now into our Chase checking account. I'm doing it today. It's June 13th, 2018. And I'm going to receive it from, I'm going to put in here, Josh. You have to add it, and I can add myself as an other because I'm not a vendor, I'm not a customer, I'm not an employee, but you just want your name in there so that you can place it there. And from account is going to be from the loan. So now I'm putting a loan in. I have a check number 432. It's paid with a check, and the amount that I'm putting into my business is $5,000. So right now, I'm going to go down here and hit save and close. And now we go back to the chart of accounts. You can see here that we now have $5,000 in the Chase checking account, but I also owe myself, Josh, $5,000. So at this point, we can take a look at what's called the balance sheet, which will show us what the company is worth. You get to that by going to Reports, Company Financial, and then Balance Sheet Standard. And right now, it'll show that we have assets of $5,000. That means that right now, if I wanted to sell the company, it's worth $5,000. There's $5,000 in the bank. On the side, that was my liabilities. I also happen to owe Josh $5,000, so really we're at zero. So if I sold anybody in this company, I'd say, okay, here's a bank account, we have $5,000 in it. Also, by the way, you owe Josh $5,000, so you're back to where you started. But at some point, we're going to start getting profit, and that's where this will start flowing in. But that is going to be, profit is going to be followed on the company financial. We can go to profit and loss standard. The profit and loss is going to basically show us our profits minus our losses, and we'll get to see how we're actually doing as a company. So that will start filling out. We're going to keep using the reports as a guideline of why are we doing this and how do we follow what our company's worth. Let's say, Mike, right now I want to start selling. So I have somebody that I'm going to sell to. I'm going to create a new customer, and I'm going to put here Jackie Smith, name of the customer. And let's see. Right now, I'm going. So we have that here. We don't need anything else in there. We can put in there the phone number, work phone, mobile, fax, anything you want. You can even drop down and pick many other things you need. Shipping information, all that kind of stuff. But for the bare minimum, we just need a name. Now let's create a sales receipt. Sales receipt is basically what happens when you go into a store like CVS and you sell something to someone. You buy something from CVS, they sell it to you, and they take money immediately. So that is the simplest kind of transaction. Right here, we're going to take a look, Jackie Smith. Now let's see what Jackie is going to buy. So let's say we are doing, we are selling ice cream. It's summertime here in New Jersey, or it's almost summertime. We're going to do, we're not going to keep inventory of this. We're going to, but it's a part. So we'll call this vanilla ice cream. So here's the name of an item, vanilla ice cream. And now we're going to put a price on this. So vanilla ice cream is $5 a cone. And then we're going to now create a new account for this. When we get paid for vanilla ice cream, we want to show this as ice cream income. I'm going to go here and create a brand new account. Now, we can do this from here as a shortcut. I'll show you how to create a new account by going to the chart of accounts. You can do the same thing. It's just like we created the bank account, but we're creating this under income. We're going to call this ice cream income. Notice that vanilla ice cream is the name of the item, but we only want to track all of our ice cream income. We don't really care whether we have an item that's chocolate ice cream, vanilla. We just want to see how we do in total. If you did want to see, let's say you do gelato as well, you can do gelato and then do ice cream and then see both income streams. But there's plenty of reports that are available to just see items as well. So we're going to put in here vanilla ice cream cone, cream cone, and that's like a description of it. We hit OK, and then here we go. Vanilla ice cream. We're going to sell 2 of them. Now that's $10. Our sale number 1. We can, if you don't want to show that you just went into business, I like to put one like that, and then it's going to do a sequence. So the next one is going to be 1011, 1012, and you can really start from wherever you want to. They're going to be paying us with a check. So the check number that they're paying us is check number 378. We have that in front of us, and the check is for $10. So we're now going to hit save and close. Congratulations, we have our first sale. So let's see what happened now. We go to our report, company financial, and we look at our profit and loss, and we see that we have $10 in income. Really simple. Okay, where does it get that from? If we click on the $10, it shows us that there's a sales receipt for Jackie Smith. And now let's see where that money went to. So let's look at the company financial balance sheet. And now we can see that we have $5,000 in cash. We have $10 in our undeposited funds. Undeposited funds is a fancy way of saying your jeans pocket, an area on your desk where you keep the checks, or even if you're doing it properly, a safe or a pouch, somewhere that you keep all your cash. The idea is that you're not going to go after your first sale. Hopefully, you won't have that much time that you'll be able to go and immediately get to the bank. So you're expected with this program that you're going to be doing numerous sales and then taking a collection of them and going to the bank. So if we wanted to now look at what we're worth, we have $5,000 in cash, we have $10 in checks. So if we wanted to sell our company, we now are worth $5,010. Of course, $5,000 is cash, $10 is in a check. So it's not as valuable as the cash, but it's something. Now, if we wanted to go and make a deposit, we can now go back to our. Let's say we're ready to go to the bank and make a deposit. We can now go to our homepage, and you can see there's a little one number 1 here, because that means that we have one item ready to be deposited. You can click on that here, and look, it pops up that we have a check ready to be deposited from Jackie Smith. You can go here, $10. And we are depositing it into Chase checking. Deposited. And we can go like that. Now, let's go back to our chart of accounts. And $5,010. Yes, it takes us to the register. The register is basically how accounting has been done for thousands of years until recently. QuickBooks is still based on the register system. Everything we do here gets recorded here, and even though you're using checks and everything else, it's actually happening here. So first we got
We are experiencing difficulties with our microphone. Please follow along on screen with Josh. Audio will restart momentarily.
little check. So let's now go and try some other things. Well, this is basically the balance sheet is made up of this over here. What we're looking at. So let's look at what this will look like on a balance sheet, and we can go and pull that up again. And now we see we have the $10 that used to appear before with undeposited funds is gone. Now there's just $5,010, and it shows in the bottom here income is $10. Let's go do another kind of sale. Let's say Jackie comes back and goes, wow, that was great ice cream. I actually have a party that we're doing, a birthday party, and I want to buy $2,000 worth of your ice cream. Can I get a better price? So we tell her, yes, we can do a wholesale price for parties. And she says, you know what? It's a lot. Can I pay you? Can I pay you in 30 days? Which is how most people do wholesale. So the answer is yes, we can, and we can do that here by creating an invoice. So if I go here This is basically what a sales receipt is, except we're not taking the money up front. We're going to take it later. Oh. Oh, okay. I'm sorry about that. Here, I just got a note that my voice is not that clear. We'll closer to the mic now. Is that better? Okay. So now we're going to create invoices. This is basically like creating a 30-day loan to customers. So we're going to use our way of doing invoice numbers. We're going to put 4 digits in here. I could put her address there if we're going to send it in the mail, whatever it is. Now let's pick vanilla ice cream. We're going to give her a better price. And there's a way to set pricing levels as well, so that it automatically will come up based on if they're a wholesale customer. But you can always just go in here and change it and say, you know what, I'm going to give her a break, $4. And it's even letting you know that you can set pricing levels here. Now we're going to do here, we're going to do, let's see, let's do a quantity of 2,000. No, that's too much ice cream. Let's do 500. That's $2,000. Okay. So now we're going to say, okay, we're giving you the ice cream right now, and we're going to give you an invoice. What that is to a customer is called a bill. They're going to receive a bill from us. In QuickBooks language, it's an invoice is what we charge other people. They're going to receive it as a bill. When we pay for the ice cream, it's going to be called a bill. When we charge others for it, when we charge others for it, it's called an invoice. Now we have, it shows Jackie Smith. We can still see that our activity showed that we did a sales receipt for $10, and then we have an invoice for $2,000. Notice here under balance total, we see $2,000. So this is a way to keep track of how much our customers owe us. For a lot of you that are doing business, you're not getting paid immediately. Whether you're doing services or selling things or doing jobs for people, this is really important about QuickBooks as a way to keep track of what people owe you so that you don't fall behind on collecting. Now, let's say Jackie says, you know what, I want to pay some of it right now. I'm going to give you a 50% deposit. So I know some of you might have that. So we're going to go to receive payments. We're opening the invoice. Again, let's start from the beginning. We're going to go to our home page. Yes. Okay, I'm actually going to switch to a mic right now. This should be a little bit better. So I'm going to go back to the home page, and we're going to go to customers, and you can see over here receive payments. And we can go right there. We can go here and go to Jackie Smith, or we can go out of here and go just to customers and then go back over here to Jackie Smith. We can go click on the invoice and go to right up here on the top. We're going to go to receive payments. So now remember, this is not the full amount is $2,000. We're only going to take a payment right now of $1,000. It's 50%. So I'm going to take $1,000, put it in here. And it's calculating over here that this is the total amount. And notice under here on the bottom left, it says underpayment of $1,000. Leave this as an underpayment because they're still going to owe it. They're giving us a check. The check number is, let's say, 124. And we're going to now save and close. Okay, so let's see what's going on now. Let's go back to our company and financial, our profit and loss. So now we have ice cream income is $2,010. So why do we have that much? Let's take a look. We click on it. We have $10 from Jackie originally, and then we have $2,000. Notice that even though they've paid us $1,000 plus the $10, it's showing our income as the amount that we've earned, not the amount that we've received in cash. Because the idea is that you might have a really busy Christmas season, but people are not paying you till January. If you were just looking at cash basis, you would basically be looking like you were having a very busy January and not a very busy December. So there are two ways to look at this. You can actually choose here whether to look at cash basis or accrual basis. If we look at cash basis, which is what you usually pay taxes based on, not what you're owed, but what you actually received, you can see here that we've received $1,000 the invoice, and $10 of the sales receipt. So we've received $1,100. But if we look at how much we've actually earned, it's $2,100, $2,000, $2,010 rather. Sorry. Now let's look at our balance sheet, because this is the other side of the picture. We go here, we can see now that this is starting to get a little bit more complex. If I showed you this 20 minutes ago, or how long were you doing this? Just for a few minutes now, you wouldn't have, probably, if you've never seen one of these before, it would look really overwhelming. But now this kind of makes sense. Our Chase checking account has $5,010. Why is that? We click on it, we see because we got the original loan for myself, and we got $10 that came on that sales receipt. We have $1,000 in our accounts receivable. What is accounts receivable? That is what Jackie still owes us. Before she put that $1,000 down, we actually had, she had an invoice for $2,000. Then we received a payment for $1,000, bringing us down to a total of $1,000. This still has a value, even though we don't have cash for it. If we want to sell this business, we can say, okay, I'm selling you this ice cream business. Right now we have $5,010 in the bank, and we also have $1,000 that we're owed. Now, a company that wants to buy you will say, okay, how much are you owed and how long have you been owed that? Now, this is important. They're going to want to look at to see, is the person that owes you, is this reliable? Can we count on this money? Now, if we take a look at this and we see that this person has already paid us and they have a good credit history and it's been a day since they actually owed us, this is not worth $1,000, but maybe a bank might say, okay, we'll give you 80% value on that. Now, if it's been 60 days, 90 days, and they still haven't paid, that's not going to be worth $1,000 anymore. Somebody that's buying your company will say, well, I'm going to give you 20% on that. I'm not giving you a full value of $1,000 because I don't believe I'm ever going to get the full amount. So that's the idea there. Now, undeposited funds, we have $1,000 check that's sitting from Jackie in our undeposited funds. We had $10, we deposited $10, so our balance went from 10 to 0, then we put $1,000 in. This is just basic math, just calculating the balance of what we have in there. And that's how we come to these numbers. So right now, our company has assets worth $7,010. We still owe $5,000, and right now, that's our total. Notice we have not paid for the ice cream yet. That's still, so we don't have a complete picture yet, but that we're going to get there. Now, let's do that. So let's do that now. We now are going to go to our vendor center. We can get this from going to the home page and clicking on vendors. And this is a mirror image of the customer center, except this is where you buy from people. So we're going to go here and create a new vendor. Actually, I'm going to show you another way to do that. If you're creating a vendor, you can actually just go new transactions and enter a bill. And right there, even though we don't have any vendors yet, it gives you an option to add new. Or you can just put in here Acme Ice Cream Co. and click anywhere else, and it'll let you know that this doesn't exist yet. Do you want to add them? You can set them up and add all their information, or just quick add and just add that name right there. Let's say we are buying $500 worth of ice cream. So the first thing we're going to do is we're going to use the same item that we did before, vanilla ice cream cone. Okay, actually there is one thing we need to do, which is go to our item list and open this up, and we have to associate this with a purchase account as well. Right now we have our income account, but where does it keep track of what it's costing us? So we're going to create a new account, and we're going to call it ice cream cost of goods. Notice it's trying to prompt me for the only thing that's still in there. COGS. And we're going to set that up, and we're going to set it up as a cost of goods account. Now, what cost of goods sold means, actually we'll go into a little bit. Okay. Now, if we go back to our home page and we go back to our chart of accounts, we can now see that we have our bank account, we have our accounts receivable, we have $1,000 in the bank, we have the loan still. Accounts payable is what we're going to owe to the ice cream company, Acme. That's going to be filled there. We have our ice cream income and the ice cream cost of goods sold. That's where that shows up. So let's go now and continue on our bill. So here we are, and now we're going to choose vanilla ice cream. And there isn't a description in here. That's also controlled from the item list. So if we wanted that to come up, we would go back to the item list, open this up, and then we can copy this and then put it over here. So it's the same description. Now, it doesn't need to be the same. On the ice cream, like for a store, when you're buying it, they might call it something else. They might call it gallon or some industry term. What your customer knows it as is vanilla ice cream cone. They might have it as vanilla ice cream base, something like that. And we can hit OK. Now, if we go back to our bill and we choose vanilla ice cream, first let's get rid of it, refresh it, and now vanilla ice cream. Now you see that? That comes in there. So Acme Ice Cream is going to see that. We're going to put in one quantity of it, but we're going to put in for $800 because that automatically has that, and we don't need to update the cost. And now we're going to save it. So this means that we've just received $800 worth of ice cream, and we owe this to the company. We're not paying them yet. Okay, so now, just like on the customer side, we see Acme Ice Cream, we owe them $800. Let's see what this did to our balance sheet. Well, let's look for a set of profit and loss. Did that have anything to do with it? Well, yes. Now our ice cream income is $2,010, but we spent $800 on ice cream. Our gross profit is $1,210. So far, we have no other expenses. We've made a profit of $1,210 based on our sale minus our costs. So now let's take a look at our balance sheet. And we see here we still have the same, nothing's changed over here, but now we have accounts payable, $800. We now owe that. This is on the book. So if we were, again, sell this company, we would say, okay, I'm selling you the company. We have $7,000 both in checks, in accounts receivable, an amount that's owed to us, in Chase checking, that's actual cash. But you should know that we owe $5,000 to Josh, and we owe $800 to the ice cream company, leaving us with a profit of $1,210. So that we're already profitable. We've only been in business for like 30 minutes. So, okay, so let's get to some more interesting things. What about running a business? Yes, that's great that we bought ice cream. It's great that we received money for ice cream. But the truth is, just to get into business, we have to have things like we have to pay for rent, we have to pay for supplies. So let's say the first thing we're going to do is we have to go and buy cones. So we're going to go to my favorite store, Costco, and we're going to go buy some cones. We're going to actually use a check. So we're going to write a check, and I don't know if they allow checks, so we're going to put in here Costco, click add as a vendor. And we're going to, notice here it says to print. That's if you're using a printer and you have checks that come from Quickbooks or something, when someone that sells it to you is compatible, you can actually print and it'll have the number on it. Otherwise, you can just write a check out and put the number that you're using. Let's say we're using check number 123. We're using today's date. We are paying $40 for just cones. So let's take a look here at what account we're doing. We can either put them as items, or we can just put here as, let's just call it supplies, ice cream cost of goods sold, and put in here cones. Of course, if we were actually tracking inventory, we'd be doing this a different way. That's a way more complex thing. At this point, we're just looking at this as just the cost of all the cones that we're buying. But to be perfectly accurate, we're not actually spending all the $40 on cones and destroying them immediately or selling them immediately. We have them in stock, so we do have that value. That's something to bear in mind. Once you get into inventory, it keeps really, really proper track, but it's very involved, and it has to be done right or it's useless. So let's say we go there. Now we have cones. Notice there's no balance because we paid them with a check. So we still have $800 in our balance. But now let's go to our balance sheet. Now, we just paid $40 out of our checking account, so our account went down to $4,970. So right here, we have that check. Now, if you looked at your bank account right now, and this is why QuickBooks is so important as well, you would save $5,010 because it's going to take them a day or two to cash that check. So if you look in your bank account and go, okay, I have $5,010. I can afford to spend $5,000 right now. By going here and looking at your QuickBooks, it's going to remind you that no, you have a $40 check that's outstanding. Now, it may not be a big deal for $40, but what if you wrote somebody a check for $2,000 and they haven't cashed it for a month because they're on vacation, and they come back and cash it, and you're looking at your bank account and you go, wow, I have $3,000 in here, and then suddenly they cash that check when they get back from Barbados, and wow, you have $1,000, or you're overdrawn. That's why it's really important to record all the checks that you write, whether they get cashed or not, and then use this balance over here as whatever is clear. Now, 6 months from now, if they don't cash the check, there's ways to deal with it then. You can void the check, you can write a new check. Those are more involved procedures, but that can be done. So now let's look down here. Now our assets are $6,970, and we have the same $800 costs. But let's look at our profit and loss, and now we have profit and loss standard. Now we see that we have $840 here. So these are all costs associated with our items. Now, let's say we have to go to the store and we want to buy something from Staples. Now, this is not something that we're going to sell to our customers. This is just something that we're going to use for ourselves for the business, but it's overhead. That's what it's called. And we're going to go to Staples and we're going to buy paper for the printer. So let's go. We're going to. We're not going to. It's not going to be a bill. We're just going to right now. Let's see. We're just going to write a check to them. We could also, by the way, you know what? Let's do this. Let's create a credit card account, because most of you are going to have credit cards, and you can do that just the same. So you can go to List Chart of Accounts, create a new account, and we're just going to put credit card. And we're going to put in here that it's the Chase credit card. And again, the last 4 digits of the card. So now we have the option, when we're going to the store, we can actually enter credit card charges. So let's do that. So we're at Staples. We have Staples in here. We're going to buy paper. So now we're going to create a new account that's not here yet for office supplies. So let's go here. It's an expense, and we're going to call it office supplies. And the office supplies here are going to be $23.50. And we can put in here in the memo, if anybody wants to know what it was for printing paper. Okay, so now we have office supplies showing up in our chart of account. And we have the vendors here. We can see Staples. Of course, there is no balance because we paid them with a credit card. Now, what did that do? Let's take a look at our profit and loss. Now, we show that we have ice cream income, ice cream costs, and then office supplies, showing $23.50. The idea is that as we add more things like rent and office supplies and regular maintenance of the business like payroll, you're going to be able to see what your overhead to run this business is. That's really important, because if somebody wanted to either give you a loan or buy your business, or they wanted to see how your business is doing, they want to see what does it cost to operate your business if you don't sell anything. So yes, you have ice cream income here, and you would not be spending this ice cream that you sold to these people. You'd still have the value of it, but this $23.50 you'd be spending whether you sold any ice cream at all. So this is important. As you start adding more things, as you start adding more expenses, you're going to see this here and then get a really good idea of, okay, this is what it costs to run my business, let's say in the winter when I don't have much income. And that's going to let the bank know, or anybody, or investors, or anyone that wants to buy this from you, or yourself even, what does it cost to run my business? If I'm just starting off and I don't have any customers yet, how much cash do I need to run my business based on the rent I'm going to have to pay, payroll, and everything else, electricity, utilities, those will all go below here. And based on that, you know, okay, I need to have this much money to have, I expect my first customer to start coming in 3 months, so I now have to have like a reserve amount of cash ready. And so let's look at the balance sheet. This doesn't show up, the expenses are not going to show up on the balance sheet, but now we can see over here here's our income, and so and then but since we use a credit card, we now owe Chase. This is a loan to Chase for $23.50. So you can see everything has a flip side to it. It shows up on the profit and loss, but that's going to affect here. If we had paid for it with cash, it would come out of our cash over here. So everything is a double. It's called double-sided entry. Everything in accounting has two sides to it. If you do something in one place, it shows up in another. Again, this income over here, we can see the transactions here. If we go back to our company and go to our homepage, we can see that we have in our chart of accounts, we can click on anything over here and then see just that account. So let's look at our office supplies and take a look there, and we see that office supplies we did $23.50. Let's do one for rent. Let's say that the rent is costing us, we're going to write a check to our landlord. Let's put it as ABC Rentals. Okay, quick add, adding as a vendor, and let's say our rent monthly is $500. We're going to add a new account here and call it rent expense. Notice that it doesn't come up because it's a new account. It's automatically going to ask us, do you want to set it up? We're setting this up as an expense. And there we go, rent expense. $500, save and close. Now, let's take a look at our P&L again. Company financial, profit and loss standard. And here we have 2010 ice cream, cost of goods. Our gross profit is $1,170. That's what you call the gross and the net. But we did make $1,170, but we have to spend $23.50 on office supplies, $500 on rent. Now our total net income after everything is $646.50. But bear in mind, there's plenty more of expenses to running a business. So this is not going to be a complete report until we have all of our sales for the month, all of our costs for the month, and all of our expenses for the month as well. So this is pretty much an overview of how QuickBooks works between buying, selling, how the reports come into play. I think that's all we need in terms of all the time we have in terms of just basic covering of QuickBooks. But there is a lot more. But this should give you like a good foundation. Are there any questions that we have though that I can start addressing?
Yes, we have one question. Question from Senna is, if you have an existing business, can you download existing transactions from the bank versus manually?
Yes, that's a good question. You can do that. There's a banking center here which allows it. Now, if you wanted to, I mean, every bank is different. Of course, now QuickBooks Online is getting very big, and that has options to download as well. But if you did want to go to banking, you can most banks either have a service, they charge like $5, $10 a month, which allows you to download directly into QuickBooks, or you can go to their website directly and download it as well.
Okay, next question from
The next question from Gloria is, does this link with PayPal as well?
So PayPal is tricky. There are ways to link with it. There isn't one for QuickBooks Online that links with it. The best way to do to PayPal, the best way to do it is to actually create it as its own bank account, because it really is a bank account. You receive money in there, it has its own balance, you can transfer it. And so let's create a new bank account, and we'll do that here. We'll create a new bank account, and we'll call it PayPal. And because you can spend from it as well as receive. So right now we have PayPal as a bank account. Let's go on here. Now we have PayPal and Chase checking. So let's say you sell somebody something and they take the money, get the money in PayPal. Now you can do a sales receipt, go to Customer Center. Let's do a new one. Let's go. Okay, we're selling to Frank Capra. He's got a sweet tooth. We're going to sell to him a sales receipt. And this is going to go here. Okay, we're going to sell some more ice cream, and we're just going to sell $15 worth. So now I can go and make a deposit and take that money, just the $15 that went into PayPal, and I can deposit it to PayPal right here. Now, this is a roundabout way to do it. There is another way that I could show you. When you go like this, it's going to basically now show you that you have $15 in your PayPal account and $4,470 here. What I was pointing out is that when you're doing a deposit, you don't, I mean, when you're receiving sales receipt, you don't have to put it into undeposited funds. That's the preference. That's the standard preference. But if you go to preferences and say, don't use under bank checking, use undeposited funds, but somewhere here, payments, yeah, use undeposited funds as a default deposit account. You don't have to do that, especially if you're taking PayPal or going directly, you're not depositing in there. Now it's refreshing everything. Give that a second, there's a lot of windows. Now when we go to a customer and we go to this sales receipt over here, we actually have the option, because we turned off that feature, that instead of going to undeposited funds, we can deposit it directly to PayPal. And that way you don't have to go through the undeposited funds account. But you have to be a little more careful that when you're depositing, you're putting into the right account. But this will also work for wires. If somebody's wiring you money, it'll work as well. Now, the next step that you might say is, okay, what happens when I withdraw money from my PayPal account? So now we have $15 in PayPal, and you want to move it into your checking account. So you can go to company homepage, go to banking. Actually, they don't have it as an option here. You can just go to banking right here and go to transfer funds. And we're going to transfer funds from PayPal. It's letting us know there's $15 balance. And we're going to put it. I want to leave a cushion of $5 in my PayPal. I'm going to go here, save and close. Now, if we look at our balance sheet, we have $4,480 in our checking account, $5 in PayPal, but a total cash of $4,485. So that's pretty much how it would work for PayPal. Of course, there's a lot of complicated things with PayPal where money takes a while to clear. So it is better to get an actual integration, and there are programs that do that. And you can contact me directly, and I can help you get that set up. Any other questions?
Oh, there's been no other questions.
Okay.
But if there are, I'll have you.
Okay. Oh, okay. Oh, that's true. Oh, they can't hear you. Okay. Sorry about that. I can go a little bit more into the banking. I can show you what that would look like if we were to, let's say, go to a web browser. Here, let's open a web browser. You can take a look at let's see if I have a Bank of America. Use. So if we sign in to online banking, okay, I'm going to use this one here. I don't have that access. Anyway, this is a client. I'm not going to go into their account. But basically, when you go in, I mean, you can even take a look at images, Bank of America QuickBooks, and it'll show you how you can do that. How to download and set up QuickBooks. There's all these options here when you're in QuickBooks that you can go and actually connect it directly to there and then import the transactions. So if you need help with that, actually going through that, I can give you a little bit. Anyone who wants to can contact me, and I can show them how to get that in. But you'll basically, yeah, it does make things a lot easier. You can even create rules which will allow you to have the same transaction every month, or anytime you do it, go automatically to the right account. So if you go to a Shell station, and you always go to the same Shell station, and you want it to show that it's going to auto expenses, you can set it that it will download all of them and automatically match that. When it sees Shell, send it to auto expenses, and then download it, and then hundreds of them at a time can come in, and that does make your life a lot easier.
Anything else coming up? Okay. All right. We have a little bit more time, but I think, that kind of covers everything that's basic. Anything else, we'll be here till midnight. Uh, is that good, you think?
That's
Yeah.
very good.
Okay. All right. So
You can-
Thank you very much, Josh. I know that you have provided your contact information, and the slide that is visible right now provides the details for both the free seminar, which is this summer, and for the fall 3 series workshop.
Sorry, yeah, that's over there. That's the slide. Okay. All right, yeah, my information, actually, I don't see that here, but my contact info, I could just go to my website. I can show you guys. Let's do that here. Website over if anybody wants to come check it out. I'm at financialf.com, and there's my information. There's my phone number, 862-224-4465. That's me chatting with you. There's links to my co-advisor page with QuickBooks. You can set up a consult right here, checks my calendar, and I do free consultations as well, like 30 minutes. So feel free, anybody who wants to, just click on set up your free consultation anytime, and I'll be glad to meet you. That's it. Thank you so much for joining us. And any other questions that come up, either on the recorded session of this, just please feel free to email me at joshua@financialf.com, or come to my website and click on contact, and you can just send me a message right here. Okay, thanks a lot, everyone. Bye.
Thank you very much, Josh. Okay, I'm going to close the meeting down now.